Yesterday, I told you about the Trump executive order that demanded that the Fed take a look at giving the crypto industry master accounts. Well, it took all of a day for the Fed to put out their first response. Absolutely astounding how fast they were able to come up with a response. That's just one piece of the news that we're going to talk about today on the Daily Wolf. Let's go. What is up, everybody? Welcome to the Daily Wolf on Yahoo Finance. I'm your host, Scott Melker, also known as the Wolf of All Streets. Now, we're going to spend the next 15 minutes plowing through a bunch of news, trying to figure out what's actually meaningful for the market and what is not. And by the way, if you want to know what's meaningful for the market and what is not, you can also check me out on YouTube at youtube.com/Scott Melker. Every day at 9 a.m. Eastern Standard Time, I have conversations with the biggest names in the industry, the greatest thinkers. So if you want commentary where I'm just asking the questions instead of giving the answers, that's the best place for you to get it. Well, if you missed the show this morning, we can tell you a bit about what we talked about. And the first story right here is Federal Reserve proposes limited master accounts long pursued by crypto firms. Okay, so let's break this down. On Monday, as I told you, Elizabeth Warren wrote an angry letter and screamed at the crypto industry, as I showed you in the meme yesterday, demanding that the OCC take a look at the 9 trust accounts that they had given to the crypto industry. It took roughly 24 to 36 hours after that for President Trump to send out an executive order coming over the top and telling them that all the bank regulators should take a look at the crypto industry and give them fair banking practices, but also very specifically that the Fed should consider giving the crypto industry master accounts. Now, we got a response from the Fed at 10:11 p.m. Eastern Standard Time the next day. Now, what this isn't is a full response. What this is a continuation of Fed policy that was actually already working in this direction. So we know that Fed Chairman Waller in October 25 already was proposing the skinny account, which is basically a different version of an account that you can get with the Fed. So they would get direct settlement, which is FedWire, FedNow, FedACH, but no credit, no discount window, no interest, and it has to be pre-funded only. So this does not get all the benefits of the banking industry, but it does get the payment side. Now, they came out with more rules about that in December, and as you may remember, Kraken, one of our favorite exchanges, they were given basically a test pilot of this skinny master account just a few months ago. So this is already somewhat happening in practice. So what's happening here is that immediately after the executive order, Waller and the Fed wasted absolutely no time giving further information on those skinny accounts. So we basically have 2 parallel rails. We have the master accounts that banks like JP Morgan and friends, they all have. That's the full access to the Fed banking system, giving them the full breadth of financial tools that they can use. Meanwhile, we're building a parallel infrastructure here, seemingly for fintechs in the crypto industry, which is called the skinny account. This is targeted to come out in Q4 of 2026, so really not that far down the road. Now, a lot of people believe that after this executive order, we are going to see actual full master accounts issued to crypto companies, depending on which ones and what they do. But we still have to be encouraged by seeing this progress and how fast it happened. Now, this gives us a 60-day comment period now that the Fed has released this proposal. Who do you think is going to be commenting? I'm going to guess it's the old lady screaming at the crypto industry, Elizabeth Warren and all of her friends, and more specifically, the banking lobby are going to lose their minds again over these skinny accounts. Now you have the power of the presidency behind this, telling the Fed to take a look, and you have the Fed actually moving forward. And this was happening under Powell before we even got sock puppet Warsh in there. You got to believe that the crypto industry is about to get access one way or another to the Federal Reserve System. Now, the next story is once again crypto adjacent, but you know, we just can't do stories anymore without mentioning prediction markets. You can't do a show without it. Polymarket moves to list parlays while SEC seeks public input on prediction market ETFs. So let's break down what's going on here. Obviously, I told you the story yesterday that Minnesota was the first state to put an outright ban on prediction markets, following a number of states doing almost outright bans. Of course, the Trump administration and the CFTC, they sued immediately, and they've been suing every state that comes with this. So we have this turf war I keep telling you about between basically federal regulators at the CFTC who believe that these are derivative contracts and states who believe that they are gambling. We can discuss that in a minute, right? So the SEC obviously is not the regulator for prediction markets, but what they do regulate is ETFs, and we have proposals from issuers to give us ETFs on prediction markets. Now, I don't know specifically what they're going to put into the ETF wrapper to give you exposure to prediction markets, but now this does enter the SEC jurisdiction, and they have also moved on to a comment period from the public, which will be very interesting to see. Now, Polymarket, and if you wonder why this is a crypto story, Polymarket was built on crypto rails. The Poly is from Polygon, which used to be Matic, and you would think that that token would go up, but it only goes down. Because welcome to crypto. You can literally power Polymarket and nobody cares about your token. But Polymarket doesn't really care what anybody says right now. They have basically come out and said, we're going to do, let's see what they called them. They called them combinatorial, you made that word up, combinatorial outcome contracts. We know those as parlays. You know, like where you bet like Kansas City Chiefs will win by 14 points, but for me to win my bet, I also need LeBron James to break his leg and Lando Norris to run into Oscar Piastri on the 4th turn of the Japan Grand Prix. And if all those things happen, I win money, right? A parlay is a bet that compounds on a bet and a bet and a bet, and it's not settled until they close. So, I mean, this is sports betting, right? So I can see where the states maybe are taking issue with that, but they didn't even ask. They basically just filed with the CFTC and say, we're going to list these products. And the document said, we will list them no earlier than May 21st, 2026. Checks calendar. It's May 21st, 2026. Polymarket is doing this. They are moving fast and breaking things. They are going to not ask for permission, but rather ask for forgiveness. And this is going to just continue heating up massively. Now, things that are definitely heating up massively, this is the biggest story of the day, and there's two very specific crypto elements to it, but let's break it down first. SpaceX confirms plans for an IPO that can make Elon Musk a trillionaire. That's so much money. It's an absurd, insane amount of money, but you know what? Good for him, holding his hands like that, looking all serious and trillionaire-y. Now, listen, this is going to go on the NASDAQ. So I'm sure there was a battle for where this would be listed on June 12th under this ticker SPCX. So they're raising $75 billion, which is the largest IPO ever, exceeding Saudi Aramco, which was $29.4 million. And of course, you have the whole syndicate running this IPO: Goldman, Morgan Stanley, Bank of America, Citibank, JPM, all the friends. I'm going to tell you about those guys tomorrow, actually. I have a plan for that. But what may be more interesting is talk about the valuation. So the target here is 1.5 trillion. Many are saying it'll be 1.75. Polymarket, 70% chance it'll be over $2 trillion when this launches. But doing some back of the napkin math, that is 94 times 2025 revenue. Now, your average space stock trades at about 4x sales. So we can say this isn't an average space stock, right? This is SpaceX, but still, this will be trading at 23x the industry average. Now, to give you some context, at NVIDIA's peak, at the peak of AI hype, their multiple was 30x sales. So this puts them at 3 times the peak of AI hype on NVIDIA at their valuation. Now, looking at the numbers, Q1, they lost $1.94 billion, and their 2025 CapEx was $20.7 billion. Their revenue was $18.5, so they lost almost $2 billion-ish. Just over, actually. And if you want to figure out what this valuation should be moving forward by 2031, to justify the current valuation, they would need to do $80 billion a year in net earnings, which is roughly Apple. So a company that's currently losing money, you can't even do a PE ratio because there's no E, right? Don't have the earnings. So they're now going to be valued at, if they can be Apple in 2031. So listen, I love SpaceX. I love what they're doing. I think this is an incredible company. This is a market story and not a SpaceX story, just to be clear. But we know how this is going to go down, don't we? We know that a bunch of people who've been holding this for years and got access to the pre-IPO shares and been trading them on the secondary market, those people are going to sell, and retail is going to sell everything else, probably crash the market, to buy this, and then they're probably going to get wrecked before it eventually floats back up. This could get very, very ugly. Now, the two parts of the story that are crypto native to this is that there's 4 exchanges that are already trading the pre-IPO with leverage on perpetual swaps. Hyperliquid, OKX, Binance announced theirs today, Crypto.com. I mean, this is absolutely wild. Right now, you can trade this at roughly a 1.75 trillion implied valuation on these exchanges, and it hasn't even launched yet. So you have to wonder if with Bitcoin topping around, 82,000 and then dropping right when these launched, is this actually siphoning off some of the capital from crypto right now? That's what CoinDesk thinks. And I think it's definitely possible. Now, I don't think it's taking money out of Bitcoin specifically, my take, but I definitely think this is one more thing that's taking massive shine off altcoins. If you can go trade pre-IPO stocks on the same exchange where you would have traded altcoin and oil derivatives and silver and gold, there's really no reason for you to keep trading altcoins. Now, the biggest reveal on the IPO disclosure was that SpaceX holds 18,712 Bitcoin worth $1.29 billion. Now, we knew they held Bitcoin, but we thought, even with Arkham and on-chain analysts telling us that they only had 8,285 Bitcoin. So this is 2.2 times more Bitcoin than we thought they held. More interestingly, their cost basis is around 35,000. They're wildly in profit. They own more than even Tesla, which has always been in the news for owning Bitcoin. And Tesla sold a bunch of their Bitcoin in the past, and SpaceX has been a diamond-handed hodler. One of us. One of us. So yes, 1.29 billion is 0.086% of an implied 1.5 trillion market cap, so it's a rounding error. But still, one of the soon-to-be largest companies on the planet are diehard hodlers of our beloved Bitcoin asset. Watching this IPO is going to be watching the Super Bowl of markets. It's going to get really, really interesting. Now, the next story is a fun one to tell you about. Terraform, that's Terra Luna's bankruptcy estate, accuses Jane Street of using insider Telegram group ahead of 40 billion UST Terra Luna collapse. So anybody who's been here for a while remembers the good old days of 2022 when Terra Luna collapsed literally the entire crypto market. It took down Three Arrows Capital. It took down all of the CeFi exchanges. Absolutely ugly and disgusting. Well, now we're getting more information on what allegedly might have happened there, and Jane Street, the huge market maker, may have been behind it. Again, this is alleged, but there's a guy named Bryce who was an intern at Terraform and went over to work at Jane Street and had a Telegram group called Bryce's Secret during the 22 collapse. I'm not making that up. It's called Bryce's Secret. Bro, call it like Bryce's very public, transparent information so that they don't go in there and see what Bryce's secret is. Just a little hint, right? But what happened here is that in this group, he was talking to his old colleagues over at Terra Luna and got insider information. This is all alleged. I'm just putting that out there so I don't get sued or something, right? And so on this insider information that Luna was about to collapse, they were able to dump 192 million in UST, which is the stable coin, right before it depegged. And instantly after Luna themselves took $150 million out of Curve. Not only that, they then allegedly shorted Luna and UST and made 134 million extra dollars. Allegedly. Bryce's Secret. So you got an intern basically who gave privileged information, allegedly, and they were able to profit over $300 million on that information and took down the entire crypto industry with them. Now, I was very proud in 2022 at the moment that I was not exposed to Terra Luna. My friend Rand Nooner was all in, very famously Luna, and I told him publicly on a live stream, dude, I don't know, man, it seems risky. You should sell a whole bunch of that. You should never be all in anything, especially this thing, right? So I was proud. And I was invested in a fund, and I won't name their names because, lawsuits and stuff. I was invested in a fund, and when Terra Luna collapsed, it dropped to like $24 or something. I get an email from this fund saying, we've done our due diligence. This is already our biggest position. We've called Terra Luna. We are going to double down. Not only that, we're going to take all our UST and go earn over 100%. We are highly confident that this is just a market wobble and there's nothing here. Literally within hours of that email hitting, Luna was trading down at like $4 and then almost to zero. Good times in contagion in crypto. And of course, then, Voyager was exposed to Three Arrows Capital and I was one of their creditors. Let's not do any of that again. What we should be doing, though, is giving the crypto industry Fed master accounts. We should not have JP Morgan and friends being the gatekeepers for what you can and cannot do in the banking industry. That's all I got for you today. We got something really special for you tomorrow. Peace.